Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Welcome to another episode of Kiss My Assets. I'm Jamison Manwaring, co-founder, CEO of Neighborhood Ventures, and I have two very esteemed folks with me. Bart Deal in Investor Relations. Hey, Bart.
Howdy.
And Heather Andrews in Property Management. So we have a plethora of views and insights today. And I want to jump into some really important news about coffee. So Dutch Bros, which is the coffee place now if you're a teenager, Dutch Bros is moving their corporate jobs to the Phoenix area. So from Oregon to the Phoenix area. And why these things are important when you're looking at investing in multifamily and housing is when we continue to see these corporate moves to Arizona, that brings jobs, it brings economic activity. And so Dutch Bros is the latest. And I'm going to just quiz the panel here.
Oh, man.
About how many locations do you think are in Arizona? How many Dutch Bro locations are there?
Can you give us an over-under or do you just want us to guess?
Yeah, just go ahead and guess.
56.
Okay.
105.
Okay, those are pretty close. If you go kind of in the middle, 81 locations.
Perfect.
Okay.
Have you been to them all?
Arizona.
I'm not.
They have 831 stores in 16 states. That's up from 300 in 2018. So these guys are growing like crazy. They hope to add 1,000 locations by mid-2025.
That's a lot of coffee.
And they have an overall goal of 4,000 stores.
I don't know that people need that much coffee.
Yeah, and you know, they have a lot more things than coffee too. They have all kinds of drinks. Most of them have caffeine in them, but the Dutch Bros is kind of the company who's caused all these problems with long drive-throughs that go out and feed into the street. But we're excited these guys are moving to Phoenix.
Well, I think they're bringing 40% of their operations is coming here. That's quite a bit. And with 40% of their operations, that's a lot of new people who need apartments. And I have them ready for them when they get here.
My dad's a former grocery store merchant, and I can't get the right number correct, but there's a tax on parking lots for spots not used that they have to pay. So by having a Dutch Bros come in, it's grocery stores or people who own those lots are happy to lease out a space in the parking lot for Dutch Bros.
I didn't know
because
this.
it's generating people. So those long lines that we all hate, it's generating so much traffic that people are going to the grocery stores.
Yeah.
So that's typically where they are. They're in the corner of a giant lot, typically.
And they generate a lot of traffic those areas.
Secrets of the grocery store. I didn't know. You should have your dad on the podcast. I want to know more.
And the article doesn't talk much about why they moved here, but it talks about, to Heather's point, 40% of their staff is moving here. Arizona is a friendly state to do business in.
Know why
this is
they're
important.
coming.
It's good weather. People like living here, and good to see these announcements continue to come through. Now I want to shift over to some projections for 2024. So we now have full data for 2023, and Zillow just came out with their forecast for what they expect 2024 home prices to do. And their expectation is home prices will increase by 3.5%. So, you know, that's a pretty good investment for the place you live, just going up another 4% in value. And they also have this map, and if you're on watching this on YouTube, you'll see that this map it's like a heat map that shows the areas that they expect to have 7% or more growth, areas that are flat, and areas that are negative. And Arizona is solidly in the blue for showing 0 to 7% growth.
Wow.
0 to 7% appreciation in pricing. And then as you follow that across the United States, you can see, you know, there are some areas that even next door to each other have a decline right next to an increase. So as we talk about a lot, real estate is local, so we know that. But overall, the trend looks like it's going to be positive. Prices moving up, even with high interest rates that we have.
When I hear that, all I can think is we need more apartments. There has to be more multifamily.
Yeah, why do you think that?
Well, if home prices are going up, it does make it more difficult for people to buy a home, and then just multifamily becomes much more of a necessity.
Yep. An additional article. This is a local article, Phoenix Business Journal. Home prices headed back up in Metro Phoenix. In the end of last year, home prices in the Phoenix market dipped down a little bit by about 2%, and already we're starting to see that with the January sales numbers, home prices are continuing to move up. Just a couple of data points. Home prices increased in the Phoenix area in 2023, 2.5%. So they've continued to move up. And so far this year, and we're only looking at 1 month, it looks like home prices continue to climb. One quote is from Greg Haig of 72 Sold. He says a sudden surge in pent up home buyer demand has caused the Phoenix housing market to rebound robustly since the first of the year. So that tends to happen a lot over the holidays. People don't really want to move in Thanksgiving and December holidays, and then the first of the year, now all of a sudden they're ready to move. So home prices continue to move up, and now as we shift and look at how that impacts the multifamily rental market, we have new data from Globe Street that talks about where the highest demand is for apartment units. And the number one is Phoenix. It has the strongest demand for new apartment units. They looked at the 12 primary markets in the fourth quarter, and they're quoting from RealPage. Most of these markets were in the Sun Belt, but number one was Phoenix, also performing well. Houston, Atlanta, Minneapolis, Newark, which were a little bit of a surprise, and then they're back to the south: Raleigh, Durham, Orlando, Austin, Charlotte, and also Salt Lake City. So these are the areas that they're seeing the highest demand for apartments, and that's definitely correlated to the cost to buy a home.
Yeah, and especially in Phoenix, we just see so much job growth and migration growth too here. So it makes sense as to why there's a surge in department demand and supply here.
So with that said, now we're looking at what are we expecting the cost of rent to be in the Phoenix market? And this is a big question if you're an investor in our REIT. You saw that our value of our shares were flat last year. That's because rents were basically flat, values were basically flat. But as we look at 2024, and certainly in the future years, we expect rents to really move up as the supply of new apartment units comes down in 25 and 26. But in 24, there's still a lot of apartments getting finished coming on the market. From Globe Street, they're quoting a source, Yardi Matrix. And it's really kind of mixed as to what we're expecting rent growth to be this year. The average nationally last year in 2023, rent growth was up 1.6%. So if you're an investor in apartment buildings, that basically meant you're now making about 2% on your asset last year of an increase. So as we look at this year, there are a lot of new apartment units that are going to continue to come out in 2024. And so we're trying to see and make some predictions around what we expect rent growth to do. This year, there's not a lot of things that you point out to say that rent growth is definitely going to be strong. But over the next 2 or 3 years, we expect rent growth to be strong as the number of new units that are coming on really gets tapered down. This year, it's going to be a bit of a mix, and it's going to depend on the market that you're in.
Well, I can tell you, as a person who's now swimming in market rents, last year reading a lot of articles talking about the spring of 2024, and that's when we would start to see some growth. We start to see rents start to tick up a little bit. And I can tell you, in our properties, the interest has really blossomed. We're seeing rents go up conservatively, but going up. People are renewing at higher rates. People are they're looking for units now, and it's. I think we are seeing what they kind of predicted last year, that rents are moving up.
And this was different than what we were seeing the back half of last year.
Yep.
Beginning really in like May through the rest of the year, there was a softness in that rental market, and people were able to have a lot of options with where they wanted to go. They could move into a brand new building, get a month or two for free.
Yeah.
And a lot of folks took advantage of that. We're moving around, taking a few months without paying rent, moving into a brand new unit. So we, in our properties that which are renovated, they're nice places to live, but a lot of folks opted to move around a little bit,
Yep.
and it created a bit of a softness. But we're now starting to see that tighten up, which is good. We also got some pent up demand because people don't like to move over the holidays, and here in January, it's been pretty robust.
Yeah, I know I've just been seeing a lot of people. We saw the consolidation of households last year where people were moving in with roommates or family.
Hmm.
And I'm starting to see people who are now ready to be on their own. They've had enough of friends and family and want to love each other from a little bit of a distance. And so I think that's also is a change.
Yeah, and we're at a historic low unemployment.
Yep.
Wages are strong. People have income.
Yep.
They would rather live in their own place if they can, and I think that you're going to continue to see that as the economy's strong. Occupancy will stay high in apartments.
To summarize what both you guys are saying is in 2023, we had 20,000 units delivered in Arizona. This gave residents options to move around, which essentially kept rents flat because there's so many options. As those units become absorbed and rented out by these residents, we might start seeing rents increasing. I mean, and in the article, it says rents might be going up by 3 to 4% every year starting in 2025.
Yep. That pipeline of new apartments that are getting completed, that's gonna continue throughout 2024 is what we expect. But as that supply starts to come down, then rents end up going up because folks have less options. And in the Phoenix market, we have 100,000 people moving here every year
Mhm.
looking for housing. So we need about 12 to 15,000 new apartments every year. Last year we had 20,000, so we had a little more than we typically need. This year will probably be similar to last year, but as we get into 2025 and 2026, it's going to be less than the 12,000 that we need. And that's when rent ends up moving up. So our outlook is as we look out the next 2 to 3 years, multifamily is really positioned well to have rent growth. And then the other part is interest rates, which play a big role in the value of apartment buildings because when you sell an apartment building, that person has to get a loan. If they can get a loan at a lower interest rate, they pay more for the building. So we've really hit the peak, the inflection of interest rates in most people's opinion. People smarter than me who follow this closely is we're hitting the peak of where interest rates are at. And as interest rates come down, then the cost to borrow to get a loan come down and people are willing to pay more for apartments. So we're kind of at that interesting time. And I think 2024 is set up pretty well when it comes to buying, holding apartments for a few years and letting it do the work for you.